Sticking to our Africa theme, the next presentation we're going to hear from Perseus Mining. Perseus is an ASX-listed gold producer with assets in Africa. And to talk to us about Perseus, we have Managing Director and CEO Jeff Quartermaine. Jeff, it's great to have you here.
Good morning, ladies and gentlemen, and thank you very much for attending this presentation. Thank you also to people who are watching this remotely. This morning it is my pleasure to talk to you about Perseus Mining, which is an African-focused company that, without doubt, is delivering outstanding performance and growth. For those who aren't overly familiar with Perseus, as is stated, we are an ASX-TSX-listed company domiciled in Australia, but exclusively focused on the African continent, where we have multiple mines in multiple jurisdictions. We're involved in exploration, development and production activities. Over the years, we've become a very consistent producer of gold at a very low cost in relative terms. So over 500,000 ounces of gold attributable, and costs around the $1,000 per ounce mark. We have a very strong balance sheet, strong cash flows, which can underpin future growth as well as returns to shareholders. And importantly, we have a very strong social licence to operate. This is essential for anyone wanting to work successfully in Africa. And as I say, governed by a very experienced board and management team who not only have spent time on the African continent, but also in this business, which is terribly important to be able to deliver success. Now, in terms of our structure, the company market capitalisation at the moment is about $2.4 billion. So we've come some way over the last few years, as you can see on the right-hand side there, with the share price growing steadily over a period of time relative to the gold price, largely in recognition of the performance of the company. Our ownership has also changed over a period of time, and now we have roughly an even split between Australia, where we're domiciled, the United States, and the rest being UK, Europe, and some Asian influence as well. So it's a fairly widely held stock, lots of free float, and owned by people around the world. As I said, we have 3 operating mines. The first of our operating mines was the Edikan mine, which we built in Ghana back in 2012. Today, that mine is probably one of the lowest cost 200,000 ounce gold producers in the world, which I think is a statistic that would come as a surprise to some people who have been following the mine over the last 12 years or so. But through efficiency improvements and a lot of hard work, we've been able to get the mine running at around $1,000 an ounce all-in site cost, which delivers a fairly healthy margin at the current gold price. Having moved from Edikan, we went to Sissingué, which is in Côte d'Ivoire, the far north of Côte d'Ivoire, and built a mine there in 2018. That's the Sissingué mine. It was a small mine that was built for a specific purpose, and that purpose was to help us to understand operating in a new country, a new jurisdiction, to be able to generate a second income stream, and to be able to demonstrate our bona fides to the government and the communities in Côte d'Ivoire as a reliable partner. And that was terribly important, because shortly after that we moved to build our third mine, which is the Yaouré mine in Côte d'Ivoire, and we've done that, and that's turned into a terrific asset for us. We acquired that from Amara in 2016 and have expanded the reserve quite substantially from what it was, and we've put ourselves into a position where we've got a fairly long life ahead of us out of that operation. All up, the group's produced about 3.7 million ounces of gold. It'll be around 4 million ounces by the end of this calendar year. But certainly the key point this is that by having a diversified portfolio, by having multiple jurisdictions, multiple mines, we've been able to take the volatility out of operating on the African continent and to be able to position ourselves to be a reliable, consistent producer of gold and cash. Our guidance that we've given for this current period has us producing, as I was saying, around the 500,000 ounce mark for this calendar year. In fact, where we sit today, we're about 2 months into the last half year. We're tracking very well on that the production guidance, very well on that, and in fact our costs are below the bottom end of the cost range, and that's a pattern that we've been displaying very consistently over a long period of time. Perseus has become known for delivering on its promises. It's become known for delivering guidance consistently over a long period. In addition to those three operating mines, we've also built ourselves quite a healthy portfolio of development projects, and that's important because, as everyone in this business knows, that as every day goes by, you're depleting your resource and you need to replenish. So over a period of time, we've pulled together quite a healthy portfolio, as I say, of projects that are moving along the development pipeline. Now, perhaps the first of these is the underground mine at Yaouré. This is going to be the first industrial-scale underground mine in Côte d'Ivoire. And so that's a very exciting proposition for the country, but it's an exciting proposition for us as a business as well, because this will be our first underground mine, and with the skills that we'll develop through this, we'll be able to deploy that skill set elsewhere on the projects that we have. The estimated capital cost is around $130 million, including infrastructure and development costs. Most of the costs of that will be funded from cash flow from the Yaouré mine itself, so it isn't a major financial burden on the business, but a very important piece that we have added, and one that will leave the operation in good shape for many years to come. We're looking at taking a development decision in October. In a couple of weeks' time, we'll be mobilising our contractor next year and be starting work, portal works, around the middle of the year, and be immediately in mineralised ground from that point forward, and that all will be going through the mill. I mean, the commercial production in April 2027 is something of a definitional issue, but we'll certainly be producing gold off that structure virtually immediately. The second of our projects in the development pipeline is the Nyanzaga project in Tanzania, or Tanzania as I'm told it's called. Now this is a project that we acquired earlier this year with the successful takeover of OreCorp, and we're really very, very happy with this particular transaction. Tanzania has had a bit of a checkered history in recent times, but I'm very pleased to say that our experience has been nothing other than very, very positive, and the way the country is going, we've had very, very strong support from the government. All licences have been developed. We've started early works on various things. We're already building relocation housing on the site, and we expect to be taking an investment decision around December this year. The capital cost at this point looks as if it'll be in the range of $400 to $500 million, but where it actually lands will be the product of a detailed FEED study that's underway at the present time. But this is a very exciting opportunity for us. As I say, a decision in December this year, commence construction early next year, and producing gold by early 2027, at a time when our production profile from the other mines would be starting to diminish by normal attrition. So keeping our production levels around the 500,000 ounce per year plus. And the important thing is entirely funded off cash off the balance sheet. We don't need to get any external financing whatsoever. This is going to be an internally funded exercise. Another development project that we have in the pipeline is the Maya Sand project in Sudan. Now, this was acquired in 2022 and gave us first mover advantage into one of the most prolific mineral provinces in the world, underexplored as well, I should say. Now, as is well known, a war broke out civil war broke out in Sudan in April last year, which has certainly put our activities on hold for the time being. However, the gold's not going anywhere, and we're patient, and I do believe that in the fullness of time this project will be developed into an outstanding project. We were extremely pleased with the exploration results that we were achieving up to the time where we slowed operations down, confirming the quality of the ore body and giving us significant optimism about perhaps an extension of that. So one of these days things will settle in Sudan. We have no doubt about that. When that is, I can't actually say, but certainly that project is there and ready to be brought into our development pipeline at the appropriate time. More recently, we acquired a 19.9% in Predictive Discovery. This is an investment at this stage of the game. I should hasten to add that we have no current intention to take this company over, but we are going to take a very close look at the project itself and to determine whether, in fact, it's worth going the extra mile to acquire the thing. Now, as the current owner of the deposit says, this is one of the most exciting development gold projects globally, and West Africa's next tier one gold mine. We're happy to go along with that description, and over the next few months we will confirm the validity of that statement by doing some serious due diligence, and at that point we will make a decision as to what we're going to do. So we look at those three operating mines and say, well, okay, so what does that do for shareholders? Well, in a nutshell, our operating and financial performance has been extremely strong and has set us up very, very well for the future. The basis of it was about 510,000 ounces of gold last year, but very importantly, an all-in site cost of $1,053 an ounce, and you don't need to be a genius to figure out with the gold price where it is and where we believe it's tracking to, that the cash margin for every ounce of gold produced is very substantial. In fact, last year it was around $1,000 an ounce. Obviously, it's pushed up somewhere from there. Now, what that's given us is about $500 million of notional cash flow for the year, US, of course, leaving us with a cash balance at the end of the year, end of June, of $587 million and no debt. So that's a fairly healthy position to find ourselves in terms of earnings and financial metrics. Profit before tax of $467 million, profit after tax of $365 million US dollars. A very credible performance, we believe. Operating cash flow very strong. And what this has meant is that we were able to take a very close look at our capital management strategy, and we decided on a final dividend of 3.75 cents or 5 cents for the year, in addition to a share buyback. Now, you can see from these charts here that the financial metrics across all measures have been steadily growing over the last 4 or 5 years. And I think that, that's certainly a trend that is pleasing. It's going to be very difficult to keep it moving upwards in that particular fashion, but provided we can keep it at these levels, I think that our shareholders are going to benefit quite significantly from our endeavours. And that brings us to the issue of capital management, which has been a very hot topic for us, because investors are saying, well, you're generating such a lot of cash, you've got such a lot of cash on the balance sheet, what are you going to do with it? Well, quite clearly what we are doing is balancing the needs of that capital between keeping ourselves reliable and strong and being able to operate in a multiple of environments. We are also of a mind to ensure that our social licence to operate is in extremely good shape. We are also of a mind to build the growth portfolio, the pipeline of projects, and what we have, beyond that point, we're very keen and happy to share that with our shareholders. And as I say, the dividend of 5 cents was around a 2% yield, and we've also announced a share buyback of up to $100 million over the next 12 months, which is another 2.3% yield. So all up, the yield was a little over 4% from Perseus for our shareholders in this latter year. And you can see from this chart that there has also been, as well as a steady increase in the cash flow and profitability, dividends have tracked along in a similar fashion. Now, I mentioned our social licence to operate, and I can say that this is, exceedingly important for us as a company working where we do on the African continent. We work very, diligently to comply with as many of the global standards as there are, and there's a heck of a darn lot of them, and the day they converge to a single standard will be a day that will make our life a lot happier, I have to say. But certainly complying, with the Gold Council standards is a major objective of ours, and that's something that we've been doing quite successfully. And what that has related to is that we've made a very, very substantial contribution to our stakeholders. And this chart here shows, a slide here, shows you, exactly what it is that we have, in fact, as a company delivered over the last 12 months to our stakeholders. So the economic benefit to the economies, $735 million US. That includes, of course, taxation and wages, money spent in the country, etc., etc. 96% of our employees are employed from the countries in which we operate, and in fact, I'm very pleased to say, referring to Edikan previously, 100% of our employees are Ghanaians. That 100% of our employees and management are local people, and they're doing an outstanding job. 89% of our procurement comes locally. We do this in a very safe manner. We're working very hard on greenhouse gas emissions and the like to ensure that they are of a standard that people are requiring. And to be able to confirm our position, we are doing limited third-party assurance at the present time. So the data that we're talking about has been validated largely by external auditors. And you can see from this chart the contribution to the host countries has been quite significant and has been growing steadily over a period of time. Now, the strong work that we have been doing hasn't really converted into full appreciation of the share price, and this chart here shows a few financial metrics, investment metrics relative to our global peers. Now, everybody would say, I'm undervalued, and I'm sure that you've heard that a few times over the last half a day, and you're going to hear it a heck of a lot more in the next couple of days as well. But I do think that there's a fairly strong case to be made when you look at these statistics that, in fact, that is the case with Perseus. So where does that leave us? Well, over the last few years, we've transformed our company very quietly into one of the more successful gold companies on a global scale in terms of production, cash flow, earnings, positioning on the cost curve, etc., etc. We have worked very hard to do the following things: to build an asset portfolio that provides short-term production as well as long-term growth. And, we believe at this particular time that we have two of the best projects, undeveloped projects in Africa in our portfolio, and have a decent stake in a third. We've got a balance sheet that can comfortably fund those aspirations without any reference to the banking market or to the equity market, about $600 million on the balance sheet today. And we have an unshakable bond with our host countries and host communities. And that is extremely important, as I say, in the jurisdictions where we are able to operate. To be able to build up that trust with the shareholders, with the stakeholders is important. And, of course, that comes about as a result of having trustworthy, reliable and talented teams of people right from the board through the business and, doing what we say we're going to do. That's something that, as a company, we're terribly proud of. Now, despite all this success on the field, as I said, we do believe that we suffer an African discount. We think it's fairly well unjustified, but people do have their own views and are entitled to those. Now, we would certainly say that by any measure, Perseus represents an outstanding investment opportunity, even now, even after all of the things that have been achieved and announced. And we would very strongly recommend it. The stock to be considered very carefully because we firmly believe that the best is yet to come. So thank you very much.
Thank you, Jeff. We might have time for a quick question, if there's any. There's one in the audience, please. Thank you.
No. Can you hear me now? So if I could ask you an easy question and a harder question. The easy question is, could you just please clarify what your guidance is for fiscal 25 gold production and AISC? And then the harder question goes to your buyback. So I understand the capital allocation rationale for buying back your shares, but aren't you taking away from liquidity? And that seems to be one of the key issues for investors and perhaps why they're not buying gold equities.
Well, let me go to the easy question first. Well, it's a touch over 500,000 ounces, and it's a touch over $1,000 an ounce. So that's That's the easy one. I mean, the costs have been up a little bit in the last quarter for reasons that we've explained to the market, but will settle back down. So that's easy. In terms of the share buyback, I don't believe that it is damaging our liquidity to any marked degree. In determining the level of the buyback, we've taken serious account of what the company would look like under a range of operating conditions, gold prices, etc., etc. We've also looked at the amount of capital that we're due to deploy over the next 12 to 24 months and beyond. We've got a very good line of sight on those things. We know precisely what it is that we need to continue to spend to maintain that social licence. So in terms of our tax obligations, our payments to communities, etc., etc. And we believe that then leaves a balance of cash that can be directed towards shareholders. Now, we haven't allocated the entire amount. This is a starting point. This is the first buyback that we've done, and we'll be working through this over the next 12 months to see particularly how it actually works and benefits our shareholders. Now, the important thing though is that, and this is the takeaway from it, is that I think you can be absolutely clear, and those who know us would know what I'm talking about. If we say that we can do this and we can do it in a way that's comfortable, then we can. And the fact that we have generated that large surplus, of course, is partly due to our hard work, but clearly is partly due to the very good gold price as well. Let's be frank about that. And in the event that the gold price was to turn down dramatically, then we would clearly need to reconsider our choices. But based on the analysis that we've done today, our liquidity is not under pressure to any marked degree at all.
Thank you, Jeff. With that, we're out of time for questions.